me also welcome on board Jay Thakkar and find out what his analysis is of how the week ahead is going to be. Jay, hi, good morning. Good to have you on the show. And that 23,800 mark clearly acting as a tough resistance. Tell me, what are we in for this week?
Good morning to you, Aisha. Well, this week definitely is going to be really volatile, and ahead of the couple of events, next week we have RBI monetary policy. This week we have the tariff plan of Donald Trump. So definitely it's going to be volatile, and I think that, see, as you rightly mentioned, 23,800. I mean, that's the critical level to watch out for, Aisha. I mean, the last fall which had started in the market has started from 23,800 and it went up to almost 21,964, 22,000 levels. So the recovery has been fast. I mean, it's been almost in 14 days we have seen this bounce back happening. But then, since couple of weeks, or I would say a couple of months now, I mean, since Feb and March, the volatility has remained on the lower side. So it might just spike up a bit more from here on. And I think, on the downside, we may see a range of around 22,200 to 22,000 as acting as a crucial support. So I think this week is quite likely to trade within this range of 23,800 to 22,000. Only a breakout beyond 23,800 should be actually, we should consider it about a breakout which can get Nifty to 24,500. Else, a consolidation can't be ruled out from here on.
Everyone is saying banks, and banks only buy banks. Is it true?
Yeah. Niranj, I was sorry, Nikunj, I would say that.
Nikunj hai naam.
Nikunj, yeah. Hearing Neeraj quite a lot now since past 15-20 minutes. So, it's just that.
This is Nikunj Dalmia in case you are confused. Neeraj is the guest family anchor. And Kunal is also with us.
Yes, Nikunj. Well, Nikunj, banks definitely, the kind of momentum which we have seen, Nikunj, coming into the banks. I mean, it outperformed the overall fall. We saw, the panic selling happened due to the IndusInd Bank fiasco, and that was very well, in fact, taken up by the other private sector banks, and Bank Nifty didn't fall much, despite IndusInd Bank falling that much, and majority of the private sector banks, if we look at, like that of Kotak Bank or HDFC Bank, have seen a good long build-up. We don't have much of shorts build up there in the private sector banks. I would not be able to comment on the ICICI Bank due to compliance reasons. Axis had a good amount of shorts, which we have seen got covered as well. So Axis Bank has seen significant short covering, and now from here on, we are also bullish on it. As a disclaimer, we have recommended that to our clients as well. So the private sector banks overall are, majority of the private sector banks which are having good amount of weightage in the Bank Nifty are looking positive. Now we look at the public sector banks. From there, we have seen Bank of Baroda, PNB, and SBI, all of them seeing or witnessing good amount of short covering, and we have seen good strength of the momentum coming back there as well. So I think net the kind of weightage which Bank Nifty has on Nifty is definitely likely to help the Nifty also to hold on to its recent lows, or at least 22,800, 23,000 range, which I was mentioning earlier. So that lows are likely to be, or that range is likely to be held mostly because of the Bank Nifty. So banking, as well as Nikunj, along with that, I would also like to add that the NBFCs and the insurance spaces also outperformed as of now the current bounce back or the previous falls. I would say overall we have seen a good momentum or spread coming there as well. I mean, we have seen good amount of short covering happening in SBI Life, HDFC Life, and NBFCs are already performing quite well. The likes of Manappuram, or maybe Muthoot, Chola, Shriram Finance for that matter. So entire BFSI segment, I'm quite bullish on, and I think it would likely to continue its uptrend.
Interesting.
The mid-cap basket that you are looking at?
Well, I think that from here on, one can go long on JK Cement. I mean, it's trading around the levels of 49.30 or 49.20 in the spot levels, and I think that JK Cement is likely to perform quite well from here on. The reason being that The overall cement pack has seen a good amount of momentum coming back now since couple of trading weeks, and we don't have much of shorts out here. In fact, rather I would say from the derivatives data, I see good long build up on most of these names. We are quite long on Shree Cement, Ultratech Cement, and I think the kind of breakout which we have seen coming in JK Cement as well is likely to help the stock to inch towards the levels of say 5,200 in the near term, and once those levels are taken off, it can inch towards 5,400 as well. So that's the positional target. On the lower side, now I believe 50 at 47.50. I mean, that's a critical support level. Till those levels are held, the upside potential is quite high.
Okay, Jay, great to have you on the show. We'll let you go on that note. Thanks for your time as
Thank you.
always. While we wait for the pre-open rates to settle down, let's tell you.
If you like this video, then like, share and subscribe to ET Now.